All right, greetings, friends. Weston from across the spread in Tokyo. We need to discuss the Bank of Japan, not just this rate hike from this January 2025 monetary policy meeting, for which the Bank of Japan lifted the front end rate by 25 basis points. That, in and of itself, was yet again very heavily pre-leaked by the media, such that it wasn't a market event. Okay, so that's not really what's significant. What's significant is the current level that the BOJ policy rate is currently sitting at, which is 50 basis points, 0.5%. Okay, and the reason that that is significant is because of this perception that exists amongst a good portion of the markets community, particularly the domestic markets community, this perception of a 50 basis point BOJ ceiling or cap that exists out there with market participants. Because if you look at a chart, if you look at just the history of the BOJ policy rate, you'll see that indeed there kind of is this like 50 basis point like resistance or ceiling that they can't seem to break through. And so therefore, Governor Ueda and the Bank of Japan board members, they now have an additional task, if not their current foremost task, of having to dispel this perception that a 50 basis point ceiling exists. Because if they don't do that, and if markets start to think that there really is a 50 basis point ceiling that the BOJ can't seem to penetrate through for the past 2 decades, then not only does that become a self-fulfilling reality, but that also means that the yen is going to be destroyed. Because what that essentially would mean is that this past January 2025 hike to 50, that means that that was the last one. That was the last hike of this normalization attempt. The Bank of Japan has to take that into consideration, and indeed they have been. And we're going to discuss like the Governor Ueda press conference and all that, okay? But we're also going to just talk more broadly in terms of the Bank of Japan's conduct as of late, and their rhetoric, and how that reconciles, or rather doesn't reconcile, with their actual actions. Because basically, the markets community, by and large, is being completely fooled by the Bank of Japan. They're hanging on to every single word, overreading way too deep into what they say, and what they say is nonsense again and again. It's the Lucy lifting the football analogy, despite just getting proven wrong over and over again. It's very confusing to me why people just keep hanging on to every word. And by people, I'm not just talking about talking heads. I'm talking about, first of all, financial media, but I'm mostly also talking about like sell-side institutions actually changing their BOJ outlook, their rate path outlook, based on like speech or something, a speech that has nothing, that says nothing. Okay, and we're also gonna dive into this like mantra, this new religion that the Bank of Japan has adopted. If the outlook is realized, BOJ will continue to hike rates. That thing. Okay, what that really means is not what people think it means. All right. So as always, this is going to be a differentiated take than the consensus regurgitation, and focusing on things that have nothing to do with Bank of Japan actual policy actions or inactions, not to mention the markets themselves. So we're going to get into all of that. Do me a favor, if you haven't already, hit the like button on this and subscribe to this channel. Please do so. And if you want further in-depth commentary and analysis, not just on the Bank of Japan, but on global macro markets and how Asia and Japan specifically is impacting them, and certainly has been, then please go to my Substack page. Please become a subscriber, and you would be directly supporting my work. And for those of you who are already subscribers, thank you for making this all possible. It seriously just wouldn't be possible without you. And I do assure you that in 2025, this will be a year in which market participants will once again be completely lost if they don't even have a basic perspective from outside the US looking in, let alone from Asia, okay? Whether they realize it or not. Link is in the description for the Substack. Please support the channel with a like and to subscribe as well. So, Bank of Japan policy rate is now at 50 basis points. That hike was in line, again, with pre-leaked expectations. It was not a surprise at all. As I said in my note, on the day prior to Bank of Japan Day, okay, this is on my Substack as well, the real substance of the January 2025 BOJ rate hike policy meeting would be resting entirely on Governor Ueda and his press conference. Okay, and Governor Ueda is modern central banking's worst communicator, objectively. So here's what I said in my Substack on the eve of the meeting, when the Nikkei, the communication arm of the Bank of Japan, who, by the way, still has a perfect track record for every single one of Bank of Japan's policy actions and changes that were made under Governor Ueda, okay? The Nikkei essentially confirmed this rate move. But what I said was that this 25 basis point hike to 0.5% on the policy rate, that's well priced in the markets already. So the official release itself, okay, not the Nikkei release, the official actual BOJ policy release announcement, that is not really going to be a market mover. By and large, the Bank of Japan meeting starts at 3:30 p.m. with the Governor Ueda press conference. Okay, so Bank of Japan has a dovish hike, the yen's going to sell off. If the Bank of Japan has a hawkish hike, the yen will be flat to maybe perhaps slightly stronger. And if the Bank of Japan doesn't hike at all, which would be insane, the yen's going to just get crushed. Okay. And again, the hike to 50 is significant because of the perception of this 50 basis point ceiling that exists with market participants. Okay. Prior BOJ hiking cycles have not been able to get above 50. So that's why my thinking was a hawkish hike would be more yen neutral in kind of immediate term price action. But on the other hand, a dovish hike would be far more directionally weaker. Okay. It's very asymmetric. The downside is much more sensitive, okay? So if Governor Ueda isn't hawkish, and I mean like explicitly hawkish, like more rate hikes are coming, period, okay? If he's like wishy-washy at all about it, then the yen's going to sell off. Because whether or not his hawkish rhetoric ends up being the case or not, Ueda has to at least pretend that the hiking cycle is not over and that there's optionality left on the table. Because again, if he doesn't do that, if he isn't hawkish, if he doesn't convince markets that there actually is more room above 50, then that would mean that the January hike that just occurred was the very last hike of this cycle, and the yen is going to get crushed. So that's why I was saying that's going to be the kind of game plan. Now, just because that's the game plan, that doesn't mean that the worst communicator in the history, not the history of, but in modern central banking is going to be able to pull it off. All right. And he kind of pulled it off, I suppose, but he really kind of didn't. All right. So before we actually get into what was said at the press conference and all that, let's just take a look at markets, specifically FX on the yen for the day. Okay. This is spot dollar yen. Here's midday policy announcement of hike 25 basis points that the market was already expecting. Then we get also the latest quarterly outlook report, which had a significant upward revision in CPI forecast by the Bank of Japan board members. More on that in a moment. And then you have the Governor Ueda press conference that starts at 3:30 p.m. And then this is the end of the press conference. And at the end of the day, if you look at the full day of trading from Tokyo open till U.S. close, what do we have? We have dollar yen flat on the day, as I was saying. In fact, if you actually measure it from when the press conference questions start, the yen had actually weakened. Dollar yen's up from there, okay? The dollar yen's moving to the upside. And if you look even further, you'll see that this was dollar-driven. Look at the DXY just getting slammed down, okay? This is dollar weakness. But if there is dollar weakness and, euro strength and, GBP USD strength and all that kind of AUD USD, all that, if every other currency is strengthening against USD, but USD JPY is up, that means that the yen was weakening. And indeed, if you take a look at yen crosses, they're all down significantly. Okay, so Governor Ueda, I guess he kind of pulled it off, but not really, because you got a yen weakening on a BOJ rate hike. Okay, now let's take a look at why they hiked, or why they say they hiked. Okay, and what the focus will be going forward. So the focus by everybody and everyone at the press conference and everyone in the markets is clearly when and how is the path of rate hikes going forward, okay? The entire press conference was basically about the path forward, terminal rate, and the Trump administration, or that whole sort of situation, okay? Those were like really just the two questions that went back and forth. So the key points from the press conference: the policy rate, 50 basis points. It's the first time in like 17 years. The CPI outlook for the Bank of Japan, okay? Core CPI fiscal year 2025 was significantly raised, 2.4%, okay? More notably, right now, all measures of CPI across headline CPI, core CPI for the next 3 fiscal years, all of them across the board are now above 2%, above that 2% target. Okay, so this outlook report that was released, this was a very hawkish outlook report, and that was very much done on purpose because they are trying to dispel this notion of there is no 50 basis point by doing that. Okay, outlook reports for the Bank of Japan are more or less sort of tool that most resembles the Fed or the FOMC's dot plots. Okay, like if they are basically guiding for higher interest rates, you get the same sort of idea of what the collective board members are thinking, and of course they can change all the time, and it's nonsense, it's bullshit, just as the FOMC dot plots are. All of those are parallel to one another. Okay, but that's how you should think about outlook reports that come out every quarter. A very hawkish revision upwards for CPI from the outlook report. Why did they hike rates? Because apparently wage hikes and prices, consumer prices, are expected to increase. And if the outlook is realized, then interest rates will continue to be raised, as they keep saying ad nauseum. They also talk about this start of the new U.S. administration under Donald Trump didn't destroy markets so far, so they were cool with hiking now. And then they talk about the neutral interest rate is still far away. He says that there's still a lot of room left. Okay. Now, as I said, just because the Nikkei leaked this, and by the way, the Nikkei, like this whole the whole media leaking this thing, that says a lot about kind of the character of Governor Ueda and his outsourcing of market volatility to like the media. It says what he's like afraid of. Every single one of these policy changes has been done via the media. It's not been done by him. Okay, it says a lot about him. Just because the Nikkei had leaked this already, rate hike itself is priced in. It doesn't mean that it's a non-event, and Governor Ueda could certainly fuck it up from there. Okay, and he almost did. But by and large, I think that the Bank of Japan members, at the end of the day, they were probably high-fiving each other for not blowing up markets in either direction. All right, but we're still sitting on this knife's edge. All right, sorry about that. I had to switch rooms because apparently a real band was coming in. These people must be so confused as to what the hell it is that I'm doing here. Who is this guy just yelling about green and red blinking tickers? Okay, so why did the Bank of Japan hike rates in this January 2025 meeting? Why now? Okay, and here's the context of the why now part. Okay. First of all, there's that whole mantra of if the outlook is realized, the Bank of Japan will continue to hike rates. With also like the synonymous caveat of if markets are in turmoil, the Bank of Japan is not going to hike rates. I went into the whole thing about this, how that was one of the stupidest, most like, I don't know, misunderstood is not, doesn't even begin to describe. This is outright stupid. It's like, read on any central bank ever, okay? How that comment, that was said by Deputy Governor Uchida, like a few days after the Bank of Japan shock hike rates at the end of July, and then Black Monday, at the beginning of August and all that. And then he comes out and he makes a speech and he says that the Bank of Japan is not going to hike rates during times of market turmoil. And the entire world, everybody was like, oh my God, the Bank of Japan is caved and they flip-flopped, threw in the towel already. They're only 2 hikes in, and that's why I had to come out and make that last video, because I couldn't stand by and allow this nonsense to happen. Forget Bank of Japan, forget Deputy Governor Uchida. There is no central bank that will hike rates during market turmoil, okay? What he said is standard practice for everybody. It is not a cave or anything. I thought everybody knew, okay? And by the way, when I say everybody, I'm not talking to to most of you who are on the other side of the screen. I'm talking about the kind of smaller minority of market professionals watching this. You should be ashamed and embarrassed if you were caught up in that whole thing. Did the Bank of Japan cave or not or whatever? You fucking kidding me? Okay? But nonetheless, the last time they hiked rates was at this end of July shock rate hike. And by the way, when I say a shock rate hike, that too was pre-announced by Nikkei. It just was done 12 hours beforehand, okay? But
let's never question Nikkei's perfect 100% track record of pre-announcing every single move that the Bank of Japan makes under Governor Ueda. Every single one of them. Okay, so July, shock rate hike. September, nothing. October, nothing. December, nothing. Okay, were markets in turmoil at that time? No, and no. The Nikkei actually had this face-ripping recovery off of the early August massive sell-off lows, up like plus 20% within, 2 weeks of that, okay? There was no market turmoil, and the outlook seems to have been met, certainly, and I'll get into that in a moment, okay? So that kind of would set up for a December meeting, but because the Nikkei didn't pre-announce a December meeting, it wasn't really that priced in, okay? But therefore, everyone was kind of pricing in at that time, before the December Bank of Japan meeting, I think it was about 60 or 70% priced in for a January rate hike, and if not that, by March rate hike, okay? And at that December press conference for a no change policy in December, Governor Ueda, for God knows what reason, said that he needs to see one more notch, okay? And talking in terms of progress with wage hike negotiations and all that. He needs one more notch of confirmation before moving forward. Essentially, what he did was he took January off the table as well at the December meeting. And when he did that, dollar yen took another massive leg upwards, as you can see here, okay? By the way, this is also following FOMC rate cut by 50 a few hours earlier, for which, as you can see, the dollar rose via DXY. But then when Ueda made that stupid fucking comment, you could see that this was a very much a yen move higher, okay? Because he took January off the table, one more notch, okay? So, January's off the table. But then we get a rate hike in January. So what was the one more notch, Ueda-san? Okay, you said in December, you took January off the table in December, you needed one more notch. What happened between the December one more notch needing and January? That's now not only back on the table, but you actually hike rates. What are the reasons? Well, here are the reasons that he gave. There is a worker shortage, apparently, in Japan. Okay. Well, that didn't happen between December and January, so that's nonsense. He also said that the wage negotiations are proceeding, okay? And that there's been some data that had been trickling in. And by that, the reason that one's a particularly hilarious category of bullshit is because the other deputy governor, Himino, apparently at holiday parties, talking to corporates and all that, he was collecting, color from the corporate sector. And they were all saying, yes, we're going to be hiking rates. And so, or increasing wages. And so I guess that seeped into actual monetary policy. Okay, so we're not talking about data anymore. We're talking about like holiday party chatter with eggnog. All right, so worker shortage, nothing new. Wage negotiations are proceeding, nothing new. Okay, so nothing changed basically between the December need one more notch and taking January off the table and then putting January back on the table. One could point to the Trump presidency start, the inauguration, right? But that's also not the case for many reasons. First of all, Donald Trump won the election in November with a Republican majority in the House and the Senate, okay? That was known in December. So nothing changed between December and January other than the inauguration itself, which happened like a few days prior to, which they cited. But if that's your reason for taking January off the table at the December policy meeting, okay, you wouldn't phrase it or refer to Trump's election and the coming inauguration as need one more notch, okay? Like what he was talking about, he needs more data confirmation. So it's not that either, okay? So then what the hell was it? What changed between the December stance of taking a hike off the table in January to hiking in January? Was there anything that changed? Well, in reality, no, okay? But what they're saying, of course, they have to come up with something, right? And this is just, you can't make this up. Yeah, something changed. If you look at the Bank of Japan's quarterly outlook report that was released alongside this January policy rate hike, what changed was rice. Rice prices. As in the food. Seriously. Fucking rice prices. If you think I'm kidding, take a look at the outlook report yourself. They cite rice prices 4 times. Okay? Furthermore, they cite rice prices like in the same sentence and the same sort of, gravity and weighting as rising wages, government subsidies are going away, even the weak yen increasing import costs, and rice prices. Like as if they're all the same kind of gravity. Now, what's really hilarious about that is because that's obviously like nonsense, right? But fine if the Bank of Japan wants to just I get it. They have to make up something, right? Everyone knows they have to make up something. I would like to know how many of the so-called economists and BOJ watchers out there cited fucking rice prices for a January hike, okay? Because if you didn't, if you called for a rate hike in January prior to Nikkei leaking this, and you were citing all these other things, but you didn't say rice prices, you are right for the wrong reasons, and therefore you are wrong. Okay? And this goes back to my broader point about nobody knows what the fuck they're talking about when it comes to the Bank of Japan, including the Bank of Japan. Okay? Rice prices. This is a rice price rate hike. Okay? Like I can't make this shit up. Okay? It's fucking hilarious too. Like an Asian central bank the Bank of Japan raising rates. Bank of Japan keeping rates on the floor since 2008 and fighting everything, fighting all these other central banks, ripping their rates higher by like 500 basis points, staying firm, having the yen get crushed, all that kind of thing. The over-indebted government, there's the mortgage situation, but if rice prices go up, rip those rates higher, okay? Now look, first of all, rice prices actually have been going up, okay? But I had to look into this too, and it's just like that rabbit hole was just a very kind of hilarious, entertaining too. Yeah, there's a rice prices have basically been, they're at like record highs. Okay, they're up something like 40 or 60% year over year for like the December figures, and it's due to a shortage, right? You have like a confluence of factors, but one of those factors is just basically supply and demand because foreigners, all of you foreigners who are coming to Japan because of the weekend, you're basically eating up all of the rice, such that the government has to dip into its rice reserves. Okay, so funny too because it's like when I hear of like dipping into reserves, I think of foreign exchange reserves for interventions or like Joe Biden's oil reserves, that strategic, election reserve, whatever thing. Japan had to tap into its rice reserves. Okay, that's how dire the situation is, and the Bank of Japan had to hike rates because of fucking rice. Okay. Anyway, it's not because of rice. Okay, that's just the reason that they gave. What it is stop listening to the Bank of Japan. Stop thinking that they have some formula. Stop, following some sort of, this is happening in the macro economy, and therefore the central bank response must be this and this and this and this. In December, one more notch. Nobody made that call, okay? But fine, one more notch. January's taken off the table. But then January's put back on the table. Why? Rice prices. Where are you at, sell-side research, with your call for any of that? None of you were able to forecast that, okay? Because this is the level of nonsense that the Bank of Japan is, putting out there, okay? So why do they do it? Who the fuck knows, okay? I'm at least very openly honest and saying, I have no idea. I had no idea before. I have no idea currently. I can make guesses, but I don't have any idea. Okay? People who currently still think they have an idea, you know that they are full of shit. Okay? So, here is the deal with this whole, religion that they've adopted. If the outlook is realized, then the Bank of Japan will hike rates. Okay? Well, let's just see how true that is. Oh, by the way, just real quick, before I forget, regarding the carry trade, because I got a lot of questions on this. carry trade is not like a thing right now. It's not like an issue, and it probably won't be for some time. The reason why is because the Bank of Japan hiking rates to 50. Another reason that 50 level is significant is because the Swiss National Bank, the SNB, has been aggressively cutting rates. Okay, so they cut rates down to 50. BOJ just hiked rates to 50. That means that the Bank of Japan and the SNB both have their policy rates at the same level. Okay, the Swiss franc, this like CHF, that was kind of a competing currency for the borrow leg, the short leg of the JPY carry trade or the CHF carry trade, right? It was a low yielding currency. The Swiss National Bank actually had their rates even further negative than the BOJ did, but then they ripped them way higher. At the time, before like yen interventions and all that, the Swiss National Bank kind of lost the public trust because for like carry trading, because they caused an insane amount of volatility in, I think it was January of 2015, when they out of nowhere allowed for the cap versus the euro to just be like abandoned, and then you saw like a 30% rip higher in CHF. Because of that, market participants, I guess, were a little bit scarred from like, shorting CHF. But now, with the interventions and all that, and the directional move, right? BOJ's hiking rates, SNB's cutting rates. CHF is basically going to like grab market share away from what was otherwise like a monopoly of the only major currency that had extremely low on the floor rates. Okay, but that's not really the case, and so therefore, I don't think that you're going to get the same level of one-sided, no other option carry trade pile into JPY. Okay, so there's that. Okay, so now if the outlook is realized, then the Bank of Japan is going to hike rates, right? Okay, so let's take a look. So this is October of 2024. This was the quarterly outlook, the last one before this current one that was just released. And as you can see, they have the policy rate at 1.9%. Okay, now where was Japan core CPI? Japan core CPI has been well over, not just 1.9%, but well over the 2% target that they set during the Kuroda days. So it seems to me that the outlook has been met. Okay, now this latest one, however, what did they do? They actually really ripped those revisions higher. Okay, because now we're looking at core CPI for fiscal year 2025 to be at 2.4%. Now, here's the significance with that. What that is, that like massive increase surprised people, that's part of the hawkish rhetoric to dispel the 50 basis point ceiling thing. Okay, because they probably figured that Governor Ueda is going to fuck it up somehow. Okay. Either way, if they hike rates to 50 basis points at that 50 basis point level, they have to also follow it up with some other actual, like, written in policy sort of guidance for further rate hikes coming. Okay. And so that's why I think that they held off until they were able to release it alongside a quarterly report. Okay. That's why they did it in January. The way that he kicked the can down the road was incredibly stupid because Governor Ueda is just not good at this game. But I think that's why they were just kind of trying to kick the can down the road, and then they basically were able to release this very fake hawkish, because of rice prices or whatever, outlook for fiscal year 2025 to have a two handle across the board for every single CPI metric that they released. Okay. Now, here's the thing about this whole, if the outlook is met, we're going to raise rates thing. Okay. This is actually not like a hawkish thing. Okay. I talked about this in my Substack. I've been talking about this for a while now. This is what that means. So the irony of using this mantra, okay, is that it works antithetically, right? So just to use an example. If the Bank of Japan, if they were to have absolutely no intention or desire to ever hike rates, right, then under this whole if the outlook is met, we will hike rates thing, the BOJ would just set its outlook for inflation at some ridiculously high, unrealistically high level, like core CPI at like 50% or something for like current fiscal year, right? And then when CPI figures come in not at 50%, come in at like single digits, and nowhere near this impossible new forecast, the BOJ can continue to keep rates unchanged and policy accommodative. Okay, because it's justified by the outlook isn't met yet. Okay, and at the same time, the Bank of Japan is projecting like 30% inflation rate or whatever, like Turkey type of thing. said, yeah, of course they should be tearing the roof off of rates and blasting them to the moon, okay? But in other words, like, the higher the outlook that they make up, like they just did, the less likely it is to be met, therefore, okay? And therefore, the stronger the policy rate will be enforced to be on hold rather than increased according to their own projections, okay? That's why it's an antithetical discipline, okay? And look, all that aside, just to be frank, right? They have been above that 2% CPI realized for 2 years plus running, okay? So, while it might seem like a sensible framework for the Bank of Japan policy on the surface, this whole if the outlook is met, we're going to hike rates, it's a very deceptive phrase, okay? The BOJ is using it fluidly to mean whatever the hell they want at any given time. It's meaningless, okay? Just because it's repeated all the time, it doesn't mean shit, all right? So that's the alternative take that you'll never hear from anyone else. So stop listening to the Bank of Japan and stop listening to others who think that they know what the Bank of Japan is about to do, because the Bank of Japan themselves don't even know what to do, okay? Find me somebody who called the rice price thing and the one more notch thing, and I will gladly talk to that person and I'll interview them on this program. Otherwise, until then, we'll see you next time. Thank you. Bye.